So part 2, how the pros play the biggest game in the town. The 5, technical and fundamental analysis. A picture is worth 10,000 words, old Chinese proverb. The greatest of all gifts is the power to estimate things at their true worth. La Lohe exponens in a sentence at Maximus Morales. I'm sorry for the pronunciation, it's so hard to say. It's a name and some title. Okay, so we can see how is the important to know the estimates or some worth. How can we get some forecasts, what is the worth or not? Okay, let's see the first paragraph. On a typical day in 2006, shares with a total market value of $100 billion were traded on the New York Stock Exchanges. And that is only part of the story. An even larger volume of trading is carried out on the Nasdaq market and various electronic crossing networks, as well as variety of the regional exchanges across the country, including the market for the futures, options, and swaps. Trillions of dollars of transactions take place each day. Professional investment analysts and counselors are involved in what has been called the biggest game in town. If the stakes are high, so are the rewards. When Wall Street is having a good year, new trainees from the Harvard Business School routinely draw the salaries of well over $150,000 per year. At the top of the salary scale are the high-profile money managers themselves, the men and women who run the large mutual, pension, and trust funds and who manage over $1 trillion of the hedge fund assets. Adam Smith, after writing The Money Game, boasted that he would make $250,000 from his best-selling book. His Wall Street friends retorted, "You are only going to make as much as a second-rate institutional salesman." It is fair to conclude that, although not the oldest, the professions of the high finance is certainly one of the most generously compensated. Part 2 of this book concentrates on the method and result of the professionals of Wall Street, LaSalle Street, Montgomery Street, and the various road-town financial centers. It then shows how academics have analyzed these professionals, the results, and have concluded that they are not worth the money you pay for them. Academicians are notoriously the picker's lot with their ringing motto, publish or perish. They keep themselves busy by preparing the papers, demolishing other people's theories, defending their own work, or constructing elaborate the embellishments to generally accept ideas. The efficient market theory is a case in point. We now have three versions: the weak, and the semi-strong, and the strong. All three forms exposes the general the idea that except for long run trends, future stock prices are difficult. It is not impossible to predict. Therefore, stock investors can do not better than simply buying and holding a fund that owns the representative sample of all the stocks in the market. The weak form says you can not predict the future stock prices on the basis of the past stock prices. This version asserts that the stock prices behave very much like a random walk. The semi-strong form says you can not even utilize the published information to predict the future prices. The strong version goes flat out and says that nothing, not even unpublished developments, can be of use in predicting future prices. Everything that is known or even knowable has already been reflected in the present prices. The weak form attacks the underpinnings of the technical analysis, and the semi-strong and strong forms argue against many of the beliefs held by those using fundamental analysis. Yes, so in my case, I have been so hard about that kind of some sentence. So as you guys already heard that some the versions that so weak, semi-strong, and strong. And for example, some price, so everybody know when some information, specific information, is broadcast all over the world in news and others media. For example, now we can regarding some YouTube video information through the YouTube video some information, so we can predict the future. So the price already reflects some that information. For example, so I heard a couple of days ago the Apple so will collaborate with the Hyundai Motors. It's like some the future cars and the 5G or some AI car, self-driving car. So it's a plunge up. I don't know. So it's a surge up at the time, and so we some trying to some get in that stock or not, but it's just really the same case, I guess. That price already reflects that information. And okay, let's